Credit reports and credit scores are now an essential part of anyone's life, whether or not you like it or not. Chances are at some point in your life, you will approach the bank to get some sort of finance, whether it be a home loan, personal loan, car loan, or some sort of a credit card. And each time you apply, the bank will do a credit check. So for us as borrowers, we need to firstly know how it all works and how we can actually improve our credit score, which will then benefit us down the track. Hey guys, welcome back. On this channel, we look at personal finance and financial well-being. And today we're doing an in-depth look at credit reports in Australia. So if you're new here, welcome. As always, guys, you know the drill. We are looking at things from a general perspective only. This is not financial advice. I am not a financial advisor. But I have worked as a mortgage broker in the past. I have dealt with hundreds of customers across Australia and I've seen hundreds of credit reports as a result as well. I've seen some pretty good ones and perfect ones and not so good ones as well. The timestamps are listed in the description, so feel free to flick through as you wish. Number one, when is your credit file created? So your credit file is created when you first apply for something. Now this doesn't necessarily have to be a home loan or something to do with the bank. It can even be a telecommunications company or even a utility company. Like for example, it could be Optus if you apply for a phone plan with those guys. Now these guys do a credit check to make sure that you are worthy enough to make your commitments on time. And I just want to make it clear that your credit report isn't actually created when you turn 18. It's when you first apply for something. Number two, what exactly is on your credit reports? So we'll use the credit report from Equifax as an example. It's got all your basic details. First of all, your name, your address, date of birth, gender, license number, all the basic things, and the actual score as well, of course. Now, if you've had a name change in the past, that will be recorded as well. For example, your last name may have changed if you got married. Plus, it's got all your inquiries on there. Now, this is very important. And you'll find it's interesting to see what actually counts as an inquiry. If you've ever spoken to a lender regarding a debt product, whether it be a credit card, personal loan, home loan, and if you've had to enter in your full name, your date of birth, license number, chances are they have enough information to do a credit check on you. Therefore, that may count as an inquiry as well. Even if the only reason you were speaking to them was to just shop around and see how competitive they actually are, and you didn't actually intend to go ahead with them in the first place, this can still be on your credit file. So with inquiries, information like the date that you actually applied or spoke to them, who the lender was, what type of inquiry was it, for example, credit card, mortgage, short-term loan, the amount, and if it was a joint or single application, all of this will be on there for each inquiry. So you really want to be careful when shopping around and asking too many different lenders, as too many of these inquiries can actually hurt your credit score. And each of these inquiries stay on your credit report for at least 5 years, so you really want to be mindful, and we'll talk about this in more detail in just a second. Along with these inquiries, there's also a section for commercial inquiries. Basically, if you run a business and you've spoken to a lender regarding commercial products, those inquiries will be on there as well. Now, these things are just inquiries at the end of the day, but there's more serious stuff on there as well, like insolvencies, defaults, and other court actions against you. If you've got an existing default outstanding, it will show information like the amount, the date, and what type of default it actually was. And this will be clearly recorded on the credit file. Same with bankruptcies, these will be on there as well. These will typically last for 5 years on your credit file, with serious infringements being on your credit file for up to 7 years. Now regarding this, I've put a link in the description for more details, so go have a look. Now we're coming to a very important part in the credit file, and this is your loan account and your repayment history. Now this is actually part of a government change that is currently being considered, and basically it means that banks share your information with credit reporting bodies. And this information will be on your credit report, and it will show the last 2 years of your credit repayment history. And it shows basic things like the actual product that you have. For example, if you have a credit card, personal loan, or home loan, what the amount you're owing actually is. And it basically has the main information about it, and it just shows whether or not you have been on time with making your repayments. And it also shows how late you've been to make those repayments. So if you've been 1 month late compared to 3 months late, this will be clearly shown on there as to how late you've been. So this is known as comprehensive credit reporting, and right now it is very important to make your repayments on time, because more and more banks are joining this system and sharing your information with the credit reporting bodies, and this is more to get a full picture. Lastly, it's got your business relationships on there, meaning if you're a director of a company, that'll be on there, or if you were a director of a company before, that will be on there as well. Or if you've been banned or disqualified in the past, this information will be on there as well, so you really want to be careful. So you guys can clearly see how much information is actually on there and how important it is to know about all these things. So number 3, how can you actually access your credit report? So generally speaking, you will be able to access your credit report once per year with the 3 main credit bureaus or credit reporting bodies. These are Experian, Equifax, and Allian. With my experience, usually the bank's preference will be Equifax, but it changes with lender to lender, so just be mindful. And I've also put a link in the description for all 3 of these credit reporting bodies, so you can check your credit score with all 3 of these completely free. Just keep in mind that credit scores are different with all these companies because they each have their own different metrics on how they actually work things out. The other thing is, usually since you can only access your credit report for free once per year, and you might want to access it more often, these banks will usually charge a monthly subscription fee. Now, I'm sure none of you guys want to pay that subscription fee, so to fix that, there's an app called WeMoney that you can download. It's an all-in-one financial wellness app, and it gives you your monthly credit score through Experian. Completely free, plus you can track your expenses and all of those things. This is not sponsored obviously, but there's a link in the description if you want to go check it out. And at the moment there's a special offer where you will get a free $5 to sign up if you use my link, and I'll get the free $5 as well, so it's a win-win. Now guys, if you are finding value so far, please leave a like or subscribe, it really helps out. Now moving on to number 4, how to look after your credit score and how to actually improve it. Now the Equifax credit score is apparently determined by 4 key things. Number 1, lack of consumer adverse information. Number 2, length of credit history. Number 3, consumer credit application pattern. And number 4, current consumer credit application information. So let's break all that down. So number 1, lack of consumer adverse information is basically if they can see if you've had any bad debts, defaults, late payments in the past, and all that stuff. So if you don't have that, that's great, that's a tick. Number 2, length of credit history. Now this is fairly straightforward. Credit bureaus literally track you for decades after you've applied for your first finance over your lifetime. So if over the last few decades they have seen a low risk pattern, and if you've been making your repayments on time, this will be a tick. Similarly, if you're at a very young age, maybe in your 20s, the credit bureau will likely classify you as risky for this category, simply because there's not enough data and they don't have a lot of information on you just yet because you're just beginning. So this point will start to improve over your lifetime. And I've personally experienced this as well. Number 3, consumer credit application pattern. This is probably a big one and we spoke about it briefly before. If you apply too many times at too many different lenders, then this will start to affect your credit score in a negative way. But the way that your credit score will be affected will be different based on what you actually applied for. So for example, if you were short on cash one day and that same day you applied at 4 different payday lenders or short-term lenders, they might all do a credit check and this will be recorded on file, and generally speaking it could affect you a lot more. The reason being is, well, because it shows that it's not a good pattern and it shows that you might be desperate to get finance, therefore you have higher risk. So if you can, try to make less inquiries. If you're looking for a home loan, usually speaking your broker can check your scenario with a range of different lenders rather than you making an application every single time. Number 4, current consumer credit application info. Basically, this is the type of loan or credit you are requesting and the amount you're requesting. This can change the risk as well, so be mindful of this. So now that you know how your credit score is affected, you want to make sure that you obviously pay everything on time, whether it be bills or any other loans that you have. Some customers I dealt with while working in the broking sector was customers who had a default from Telstra or Origin Energy in the past because of some dispute that they had, and these companies placed a default on my customer's credit file, which obviously ruined their score, and for every single bank application, this is a huge warning. So you really want to be careful in paying everything on time. I know I keep saying this, but it's very important. And also, if you're moving houses, make sure you let these companies know so your bills can be redirected to your new address. There's nothing worse than finding out that you owe like $70 to these companies, and now your credit file is potentially ruined over such a small amount. Generally speaking, if you've had an issue with a lender in the past, maybe you had late repayments back then, and now it's all resolved and you pay everything on time, your score might not improve immediately immediately and it might still be low because these companies track the score over many decades and many years, and it takes time to build everything up again. So don't expect this to improve quite quickly. In fact, the people in Australia that have the highest credit scores are people in their 40s and 50s and older. So as mentioned before, keep in mind the comprehensive credit reporting system, as this is now going to be the norm moving forward, as your credit repayment history is tracked for the last 2 years. And if you've got late payments in the past, the bank will not ask the credit bureau to remove those late payments in the history if it's actually true, meaning if you were actually in fact late for those repayments. But if there's an error on your credit report, you can generally get it removed for free by contacting your bank or the credit provider. There's a link in the description regarding this in more detail, so go check it out. Another example is that let's say that you can't pay your home loan anymore because maybe you've lost your job, or maybe there is some sort of a difficult circumstance. It is best to contact your bank immediately so they can possibly defer your repayments or even lower them for the time being. And the reason why you want to do that is because in most cases, this may actually not affect your credit score if you've told them in advance. But if you've actually started missing repayments and then you tell the bank, then it might actually be too late. Now guys, the last thing we will look at is these companies that somehow magically will remove black marks from your credit report. Personally speaking, I have never used these myself, so I can't recommend them to you guys. Especially with their reputations, you guys probably know some horror stories. So let's see what the government has to say about them. So as you can see guys, use these at your own risk. Make sure you read everything, all the terms and conditions. And you really want to be careful to make sure that you don't pay for something you can do for free. So that's it guys, hopefully you're still watching and you learned a thing or two. Having a good credit score gives us less hassle when applying for a home loan, less questions, faster turnaround time, and potentially better rates. If you're young, it's best to avoid these mistakes early on so they don't affect you in the future. If you found value in this, please like and subscribe, it really helps out. Once again, there are links in the description for all those free credit reports, so go check it out, and I'll see you in the next one. So there's a solution, it's called an app.